Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody guys, let's take a look at the gold market as we usually do in the second video. So the gold market behaves approximately in the same manner as the euro currency, so you can see really weak reaction on even major targets. So on the daily chart, the market has hit 2 days ago ABCD OP target. It's also accompanied by the daily result, but upward reaction is really moderate, so it's not really very significant. It's a weak reaction. The same story we see right now on the euro currency. It also has hit within a few sessions multiple targets, including the same OP on the daily chart, but also reaction stands very shy. So what does it mean? It means that currently, guys, global economy stands in the changing of the cycles. So currently, cycle of the rising rates is coming, and it's already stand on the market. As you can see, the treasury bond yields have increased significantly. The implied inflation is rising about 2.5% in the United States, and that put the Fed Reserve on the road of the rate increasing. And I will not be surprised if Fed will raise rates 4 times this year. So this also stands on the table because recently there was a really significant jump in the yields of the treasury bonds. So as you know, in the United States, the 10-year bond yield has special meaning. It's the benchmark because the mortgage rates stands in relation to the 10-year yield. So it's very important, and that's why we think that it's not just some technical issues or not some tensions or geopolitical situation here and there, but this is really global processes in the global economy, and particularly speaking the economical cycles. So currently the cycle of the rate increase stands underway. Here, guys, at the first stage, although we have mentioned that currently it's not as simple with this situation around rate increase in the United States, personally I see something bigger than just the normal cycle change. On the first stage of this, investors will treat it as usual. So there's some kind of the pattern in the head of the investor. So if rate starts to rise, it means that the dollar should rise as well, and United States assets becomes more attractive. I mean, bonds, stocks, all that is nominated in the United States, a dollar is more attractive because it provides the greater return. But guys, this is only in the first glance. Currently, we should understand what stands on the background of this rate increase. Is this just the inflation growth of the economy, or is just the devaluing of the United States debt? So personally, I think that currently, in current rate increase, the latter has also significant value. Maybe it's not determine all the process around the yields in the United States, but currently, guys, I think that the devaluing of the United States debt has really big part of the rate increase currently. But the consequences of this process will be probably we will get only later. It's not on the first stage when investors just thought that how it's beautiful that rate starts to rise and we could pay more attention to United States assets, to the bonds, to the United States dollar, and so on. Well, that is of course pressing on the gold market, and we'll see this collapse has happened. Even the geopolitical tensions have not been able to support the gold market. As market has hit the OP, as I said, reaction stands very small. I think that this weak reaction suggests that probably market could drop further. Next destination point will be, as you can see, 1285. 618 support here, but if market will drop below the OP, next destination point will be XOP is 1260. So next destination point of the gold market will be. Non-farm payrolls release hardly will be very bad because, as you can see, DP report shows not really bad numbers. 2400 thousands, with the expectation around 228,000. So it's approximately according to the expectation. It means that non-farm payroll also should be somewhere around the average meaning, and hardly we will see the big retracement that this will be based on the poor non-farm payroll release. That's why it seems that this is just minor reaction here stands, and personally, guys, I do not see any reasons here to take the long position currently. What important details that we could get very soon, today, tomorrow. On the 4-hour time frame chart, guys, you can see that market keeps harmonic swings very well. First reaction was on OP of the intraday chart. It's minor retracement here. It was repeated here and here and here. It's different speed. Here is a bit flatter, here is a bit sharper, but the distance of the retracement is the same. On the XOP reaction already has happened. That was the point when we said, if you would like, you could try to take the long position, but don't forget move your stop to the break-even. So we hope that you have followed our advice, because market currently mostly showing some flat action, and it could lead to appearing of the bearish dynamic pressure. Because guys, if I will plot here the MACD predictor, you will see the trend has shifted bullish, but price action is not quite bullish. So you can see trend has shifted bullish, but price action mostly stands flat. Any attempt to move higher has met the sell-off here. One of the reasons why this could happen, guys, and why this is going on here, is because significant stops below these lows. And as you know, the gold market very rarely left behind the untouched stops. It tends to grab stops, despite what will happen later. After this will be the collapse will follow, or market will just grab stops and return it back up. But stops should be taken out. Rome should be destroyed. So that's why it could explain this a bit flat action here. If you would like to take the long position here, guys, based on this OP already, you have long position. You probably should keep the stop on the break even, because the butterfly pattern that we have talked about here, it was the butterfly when we said trying to take the long position here. Yesterday we said move stops to the break even and watch what will happen. And indeed, so overall price action is not very fascinating. So based on the double repo, market wasn't able even to hit the minor target of the double repo. The 50% resistance of the whole thrust turns down, and in general upward action has not happened yet. It makes me think that here another leg down could happen, and that's what you need to keep an eye on if you would like to take the long position, because market, for example, could grab stops, dive slightly below 13 even, and then shows fast return up. Here it could take the shape, for example, of the butterfly on the hourly chart. So it could be kind of the, you can see this could become left wing, so right wing, market will drop to the 1298 or probably to the 1618, because by the stops it probably will dive even lower, probably here, at least here. So it will be 1295, and then could show the fast return up. If this will happen, that will be signal that you probably could try to take the long position. If market will drop below 13 even and will hold there, then it will mean that market is going to the next target and will proceed action to the downside. Another reason, guys, why I think that another leg down should happen is kind of the flag action is forming. No significant bounce up is happening from the OP, so two flat action for important daily target. Well, for taking the short position, this also could be a solution. For example, you could place around 13 even stop sell order. If and when the stops will be triggered, market by the momentum, but just the triggering of the selling stops, will drop further, and that will let you to first the take trade, and you could move your stops to the break even as soon as market will collapse. If it will be some fast upward return, in this case you will lose nothing, just will close at the break even. But if market will continue dropping and will accelerate further, well, you will get the position right at the moment of the breakout. So this is one of the tactics that you could use when you would like to take the short. So that's actually what we see on the gold market. Probably hardly will get any fast action before non-farm payrolls release tomorrow.